$211,000 in premium you would have lost.
Right. Insurance dudes are on a mission to escape being handcuffed by our agencies.
How? By uncovering the secrets to creating a predictable, consistent, and profitable agency sales machine.
I am Craig Pretzinger.
I am Jason Feldman.
We are agents.
We are insurance dudes.
Right now, while it's fresh in your mind, check out live.teledudes.com.
We took our notes from over 100 interviews with top agents from around the country and made it into a live webcast.
Using these strategies led Craig and I to selling more than $10 million in premium in the last 2 years.
On this call, you'll receive the exact blueprint to get the same results.
Just go to live.teledudes.com to register for this upcoming Tuesday's live call with us.
If you jump on this call with us, we're certain 2022 will be an absolutely fantastic year for you.
See you there.
Hut, hike.
Hike.
Hike. That's from Foosball, Mr. Jason.
Oh, boy. All right,
Yeah.
Playbook. We're doing a playbook.
Yeah. Now, what we'd like to talk about, I think last time we talked a little bit about different lead types. So we really want to help folks get results from leads and the whole system they put together to have success with leads. So, and our folks that we've worked with have a ton of experience in this, and no point in reinventing the wheel. So we wanted to share some findings that we got as a result of buying leads and then put in lots of dials on them. So one of the things that we have found over time has been the enormous number of dials it takes to get a hold of leads.
Yep.
And,
So
yeah.
So Craig sliced off a month of his agency from last year, and let's dive into those numbers a little bit. Craig, can you talk
Sure.
about? Yeah.
So we took a 30-day slice.
Mr. Craig, you're tired.
Oh, I just am a little yawny. We took a 30-day slice and looked at from dials to sales. Okay. Now, at that time, I had 11 telemarketers, and we had in our funnel during that 30-day slice about 8,500 leads. Now, these leads weren't all purchased within those 30 days. Some of them could have been 60 days old, some of them 90 days old, and even some further along the pipeline. But we touched or made dials to 8,500 of the leads that are in the hopper. So from all of those dials, right, in the 30-day slice, 110,000 dials, 2,921 were contacted, right? So that's almost 3,000 new contacts. And that was either by the sales team or the tele team. And then from those, they resulted in almost 2,000 transfers. So 1,901 transfers. And of those transfers, we quoted about 75% of them for 1,536. Now, keep in mind, if we quoted them, but they didn't qualify because they had a DUI or no prior insurance or whatever, for whatever reason, they get kicked and it doesn't count as a quote. So we had 1,536 real quoted households. And then from all of those, we ended up selling 496 items for about 278,752 in premium.
Wowzers. That is a smoking month.
It's one of the top months now, but that's not the point of all of it. The point of all of it is to show the sheer number of dials and leads that have to go through that funnel in order to get to this amount of premium or any amount of premium.
So why don't we slice that up? So dials 0 to 94 is what you were looking at. What were the percentage of dials that were called between 0 and 8, 8 and 21, and 21 to 94?
So it's interesting. If there's any statisticians out there, that you're going to love this stuff. But it fell into a normal distribution, which is bell curve, right? Look, the whole thing looked like a bell curve. So from dials 8 to dial 21. From all the sales, how many dials it took to get to that sale, 68% of it fell between 8 and 21 dials. 68%.
Crazy.
Yeah. And so 22 plus was another 16%. So you're looking at 84% of all of the stuff that closed was at least 8 dials.
Wow. So
84%.
8%. So 16% was 0 to 8 or
0
1
to 7.
8 dials.
1 to 7. So 1 to 7
right.
resulted in 16% of the sales. Now, what's really, really fascinating about all that is if you go around and ask all of your agent friends or talk to agents, which we've talked to lots of agents, most agents who buy leads are going to call them under 7 times. Usually it's 2 or 3 times. And what's really important is to also inspect that, because you may buy leads, you may think that your people are calling them a lot of times, but if you really get granular with it, look and actually investigate that, they're probably calling them once, twice, or maybe 3 times, my lady.
Right. Yeah. So diving into those numbers, not doing dials 24 through 94 would have cost 50% less premium.
Yeah.
That is insane.
And in this case, that's $139,000 in premium, right?
Wow. Yeah.
And under the comp plan that the carrier that we're with, that's almost $28,000 in revenue. So by same lead spend, right? Same lead spend, it would have cost almost $30,000.
Crazy.
Of lost revenue, right? That's the opportunity cost of not making those dials.
So that's 50%.
Yeah. And the cost of making those dials was well under that 30,000, right? The 27,800.
Right. So that was 50% less premium. So what about not doing from 5 to 24 dials?
Let's call it 8 to 24 just to be safe.
Okay.
But yeah, so now you're looking at an additional 26% less in premium, which is 72,000 in premium, and another 14,500 in revenue. So most agents are going to do 4 high end, right, of dials on a lead. So we're looking at, if everybody did what everybody does, they're costing themselves a ton of money, right? They're leaving that opportunity cost. In this case, had we had the same leads, bought the same leads, but not made the dials, it would have been 41,000 plus out of pocket, 42,000.
So
that would have hit my pocket.
Let's dive into the lifetime value.
Right. That's the whole point of all this stuff, right? This is the big setup for lifetime value. So we could look at our spend this month and then what we wrote from this month, and then say, oh, well, I spent 10 grand on marketing, but we only wrote 30,000. So I'm not ahead. But we're not taking into account how long it takes for the leads to bake, right? How many dials do we have to get on it? How much time has to go by before those leads start closing? And typically you're going to, if you're looking at that bell curve that I was describing, the top of that bell curve is about, 3 to 6 weeks in. So there's time involved, right? To get to where the sweet spot. And you also want to look at the lifetime value of that business written. So if we write, let's say a household for $1,200 a premium, you with me still, Mr. Jason?
Yep.
Okay. If we write $1,200 in premium of new business,
okay,
it's going to renew a certain number of times, right?
Right.
And you could figure that out from your retention, what the chance is of it renewing, or you could just calculate using the retention. So let's assume that 90% of it is going to renew for some amount of time, and you could plug it in, chug it. But you could look at, okay, if it renews 5 times, and even if it drops 10% because of the retention each time, you know what you're going to make at the renewal. You know what you're going to make at the next renewal. You know what you're going to make at the third renewal. You know what you're going to make at the fourth renewal, fifth, sixth. So you could go out as far as you want. Let's say, just to be safe, let's go 3 years, right? So if it's an auto policy and it's a 6-month policy, you may be seeing 6 renewals, 5 renewals after the initial purchase. Well, you want to add that in to your overall revenue. That's your lifetime value of that client. And you know that you could actually afford to spend up to that cost without losing money, right?
So
that revenue rather.
Let's look at that, what you sold, the 211,000.
Yeah.
211,000 in premium you would have lost.
Right. So what's interesting is I could have spent $900 my lifetime value on the 211,000 in premium. Okay. So what we would have lost was 211,000 in premium.
Right.
If we didn't make those dials past 5 or whatever or 8 rather, I think it was, we did it from 8, then that would have cost, or the cost of that would have been the lifetime value, 99,068. Right. So,
and that's over the 3 years.
Right. Doing that is a 3-year, right. Assuming 3-year. And in this case, we did an 84% retention. So we did a lower retention I'd rather under promise and over deliver. So we do, number one, we could spend 99,000 on marketing and we're okay. Obviously we didn't even spend close to that. We spent about a third of that on marketing, but the revenue that we got as a result of it was 42,000, right? So this is what we would have, what it would have cost every month. If you annualize it, it would have cost us over $1.2 million in lost revenue.
Well, you mean 12 months if you did that 12 months in a row?
Yeah, if we did it 12 months in a row.
That is bananas.
It really is bananas. It's bananas. And
it's
so
banana
that's
sandwich.
I remember we did a number of it, obviously lots of agent interviews, but the ones that stick out the most are the ones where those agents talked about, you got to know your numbers. And at that time, we didn't really know our numbers. We certainly did talk in lifetime value or acquisition cost per sale, and all these other things that we now look at that really are the most important components, because now you can make a database decision. It's not a guess. It's not a bet, right? We're not buying Dogecoin and hoping it goes up. We actually know mathematically that it's going to work out as long as we hang in there.
Love it.
Yeah.
Love it. Cool. Well, that's awesome. That is lifetime value and something to think about when you're purchasing leads.
Yeah. I tell folks now, look, if you're not going to put the dials on those leads, then don't even buy the leads, because it's just, it's like buying the ice cream and then sticking it out in the desert and waiting a month to eat it. You can't do that.
No, wouldn't pan.
No, wouldn't pan.
All right, Mr. Craig. And that is
Mr. Jason.
Playbook.
Yeah. Playbook. You almost said coffee talk.
I know.
All right. Well, I'll see you next time.
All right.
Okay. Bye-bye. Hey, what are you still doing here?
Well, while you're still here and while it's fresh in your mind, check out live.teledudes.com.
Yeah, if you weren't listening before, we took notes from over 100 interviews with top agents from around the country and made it into a live webcast.
Using these strategies did help Craig and I write over $10 million in premium in the last couple years.
And let me tell you, on this call, you'll receive the exact blueprint to get the very same results.
Again, that's live.teledudes.com to register for this upcoming Tuesday's live call with us.
And if you jump on with us, we are certain 2022 will be an absolutely fantastic year for you.
See you there.